Welcome to the Deep Dive. We cut through the noise to get you the insights you need. Today, we're looking at SCC Siam Cement Group, a huge player. And if you've ever wondered how a company that big handles today's, complex economy, we're aiming to get some real clarity on that today.
Exactly. Our mission here is to pull out the really critical insights from the sources you've shared. We'll be digging into SCC's latest results, their business plans short and long term, also the key challenges, what analysts are saying, and the important stuff like financial stability and dividends. The goal is really a full, actionable picture of SCC for you.
And it is a fascinating picture, isn't it? Because we'll see how SCC is trying to balance things, managing the immediate problems in their traditional businesses, while also making some pretty bold moves into future industries. Expect some maybe surprising details, a good look at corporate adaptation, I think. So let's dive in.
Okay, let's kick things off with Q1 2024 performance. Their EBITDA, that core profit figure, came in around 13 billion Thai baht. What's the story these numbers tell us? Right, and the Q1 net profit was 7 billion Thai baht. But what's really shaping that figure, if you look closer, is the Long Son Petrochemicals Project, LSP, in Vietnam. It's key for the future, definitely, but right now, it's been a noticeable drag on the reported profit.
Okay. So the headline number doesn't quite tell the whole story then. What does it look like if we sort of peel back that LSP layer?
Exactly. If you actually take out LSP's impact, their core business profit jumps to around 4 billion Thai baht. And this isn't just, one project dragging things down. It really shows SCC's core portfolio, acting as a kind of strategic shock absorber. It shows diversification that's strong enough to cushion these blows, even from big new ventures. That's vital for managing risk at this scale.
That's a really crucial distinction. Speaks to the underlying strength of the traditional side, doesn't it? Even while this major new project is still, finding its feet. Okay, now moving into Q2, those net profit numbers really jump out. Over 17 billion Thai baht. That's a huge increase, like more than 300% year on year. What was the main thing behind that?
Yeah, you spotted the big one. That large gain, it was mostly driven by a significant one-time special item, around 15 billion baht of it, actually. It came from restructuring their shareholding in PT Chandra Asri Pacific, that's CAP in Indonesia.
Right, CAP. So this massive gain isn't just like a lucky windfall. It's SEC actively simplifying its investments. What does that signal strategically? Maybe about transparency too.
Precisely. By clearly separating out the value of that asset, they're not just boosting the profit number, they're making their underlying operational strength and their future growth areas much clearer, more transparent. It's potentially more attractive to investors that way. It's a strategic unbundling, really, even while they wait for the petrochem business to fully bounce back. And, even taking out that huge one-time gain, SEC's operating profit for Q2 was still solid, around 2 billion Thai baht, which is still almost 100% growth compared to the previous quarter. So the underlying operational improvement was definitely still there.
That is impressive. So what were the main factors driving that improvement in their normal operating profit in Q2 then?
Well, the main drivers were seasonal dividend income, first off, plus stronger performance from their cement and packaging businesses. And also, their internal cost management efforts really started showing results. All told, their EBITDA for the whole first half of the year hit over 30 billion Thai baht.
Okay, so they've navigated those immediate financial waters, including that big Q2 boost. How is SCC planning to shift focus now from these immediate issues to that bigger strategic balancing act, for the rest of the year and maybe more importantly, for the next 5 years or so?
Yeah, they've laid out 5 key strategies for the second half. First, they're really focused on boosting operational efficiency across their ASEAN operations, just getting better at what they do. Second, they're laser focused on getting LSP ready to restart production. That's critical for future profit.
Right, getting LSP back online is a huge priority then.
Absolutely. Third, they're pushing ahead with those new low-carbon cement products. The Gen 2 and Gen 3 types we talked about, these are basically next-gen formulas to cut carbon emissions in production, really leaning into sustainability. Fourth, prioritizing business restructuring, cutting debt, managing capital spending carefully. They estimate about 30 billion Thai baht for the full year's capex. And finally, they're committed to developing high-value added HVA products and their smart value lines.
Okay, those short-term goals really capture that dual focus, don't they? stabilizing the core, the traditional stuff, while aggressively building for the future. It's a strategic tightrope. But what about the longer view? There are investment plans. There's a lot of capital earmarked there, isn't there?
Oh, definitely. SCC has a pretty substantial 5-year investment plan. We're talking 2025 to 2029, totaling 150 billion Thai baht.
Wow, 150 billion over 5 years, that's quite a number. What does that scale of investment really signal about their long-term direction?
Well, that 150 billion isn't just a big number. It's SCC basically placing a huge long-term bet, a bet on the future of green energy and sustainable materials. They're not just adapting, they're really aiming to reshape their industry's environmental impact and, secure their relevance for decades. These investments are heavily focused on a few key areas: expanding their low-carbon cement market globally, upgrading the LSP plant to use E10 feedstock that's a more advanced, cost-efficient, maybe more sustainable raw material. It should help lower operating costs. And crucially, significantly expanding their clean energy business. They're targeting 3,500 megawatts of renewable capacity by 2030.
So, yeah, the direction is very clearly towards sustainability, clean energy. But like with any major strategic shift, there are always bumps in the road. Hurdles. What are the main challenges SCC is dealing with right now beyond just getting LSP running smoothly?
Well, a big one is the petrochemical product margin. It just hasn't fully recovered yet. There's global oversupply, demand is still a bit soft in key markets. That continues to hit profitability in that sector. Then there's LSP itself, obviously, that needs to get sorted out, operating profitably, contributing positively. And of course, you've got the broader risks, the global trade situation, import tariffs, things that can affect the whole economy and their export markets.
And the elephant in the room, competition from Chinese products, right?
Yeah.
How are they feeling that specific pressure?
Absolutely. That's a major factor. Chinese players often have cost advantages, scale advantages. That puts pressure on SCC's traditional markets. But SCC is tackling this. They're focusing intensely on cost reduction, keeping financials strong, and really leveraging their existing production bases across ASEAN. That lets them use local supply chains, market access, brand loyalty. It gives them a kind of unique edge against some of those broader market pressures.
Okay, given all this, the challenges, the strategy, what's the general feeling from analysts? Have any specific price targets or recommendations come out recently?
Yes, there's a research report we saw from Trinity Securities. It came out mid-June, so before the Q2 results were fully announced. They issued a buy for speculation recommendation, target price, 194 Thai baht.
194 baht. And is that target reflecting SCC's overall value, including these restructuring moves like CAP, and maybe looking ahead a bit?
Exactly. The analyst view seems to be that with that CAP restructuring, the value of that investment is now much clearer, separated from normal operations. It makes it easier to see that specific value piece. So while everyone's still kind of waiting for the petrochem business to fully turn around, the restructuring itself has brought a lot more transparency, more clarity on their asset value.
Right. We've definitely dug into the strategic puzzle SCC is solving, financially, operationally.
Yeah.
But for many listeners, the bottom line is often, what does this mean for me as an investor? Let's turn to what shareholders often want to know: dividends and the company's financial health.
Okay, good news on the dividend front. SCC just announced an interim dividend for the first half of 2024. It's at a rate of 2.5 CAB Thai baht per share.
2.50 Thai baht. That's quite a commitment to shareholders, given the pressures.
It is. The ex-dividend date is August 13th, payment on August 28th. It really shows they're committed to returning value, even with these various challenges. And regarding financial stability, SCC keeps maintaining strong cash flow from operations, especially strong in Q2. They're also consistently managing their debt. We saw that net debt reduction back in Q1. This focus on strong financials is absolutely crucial if they're going to support those ambitious long-term investment plans.
Well, we have certainly taken a deep dive into SCC today, from their latest performance, where we really had to look behind the headline numbers, to their interesting short and long-term strategies, the analyst views, and the good news on dividends. It feels pretty comprehensive.
Absolutely. I think the overall picture is clear. SCC is in a major transformation phase. They're grappling with ongoing issues in traditional businesses, petrochem margins, LSP, that sort of thing. Plus, dealing with global economic effects, intense competition. But at the same time, they have these very clear, very ambitious growth plans, future-focused stuff like clean energy, low-carbon products. It's a dual challenge, definitely, and a fascinating case study in how corporations adapt.
It really is, and it does make you wonder, doesn't it? How effectively can SCC manage this balancing act? It's delicate. On one side, Yeah, they need to stabilize the established operation. That requires careful cost control, debt reduction. It faces ongoing challenges. But on the other side, they're making these huge new investments for long-term growth. Low-carbon cement, renewables, aiming for that big 3,500 million W target by 2030. It really represents a massive strategic puzzle for the company, especially with all the continued global uncertainty, trade issues, new competition coming from markets like China.
It's a truly significant strategic juggle, no doubt, with pretty high stakes.
So as you think back on this deep dive, what aspects of SCC's strategy, or maybe the challenges they face, stood out most to you? And how might this discussion change your perspective on corporate adaptation, on long-term planning in this, well, dynamic global economy we're in? Something to maybe mull over.